Ledger CEO says that while it may take a few years, big money is getting into crypto over the past 12 months. Some investors learned the hard way why they needed to move their crypto offline. Those who kept Bitcoin and altcoins on crypto exchanges like FTX lost control of their assets, sometimes forever. Events drew a red line under the storied crypto adage, not your keys, not your coins. And FTX's loss was hardware wallet manufacturer Ledger's gain, however. The Bahamas-based exchange's November 2022 bankruptcy filing delivered to Ledger our biggest sales day ever. The firm's chief experience officer, Ian Rogers, told Cointelegraph, and November turned out to be our biggest sales month on record. Paris-based Ledger has been on a strong growth curve recently, though the past year has not been without controversy. In May, for instance, the firm drew industry ire when it launched a new secret recovery phrase storage service called Ledger Recover. Still, it remains one of the best known and most used crypto wallet makers in the world. Cointelegraph recently caught up with Rogers and Ledger's CEO Pascal Gauthier in New York City to discuss the new crypto climate in the United States, the latest trends in crypto storage and business and doing business in the US and Europe, among other topics. And the reason we think that the crypto blockchain sector is still in the doldrums or moving sideways at best, but you see reasons to be cheerfully right here in the US and not really understand what post-African back in series that we all have within the substance of HIV saying, we will go to porting centim was a utility and or commodity, not a security. This triggered two things. So large companies like BlackRock began their ETF application, and then the media narrative around Bitcoin changed. As 2023 began, Bitcoin was for drug dealers, terrorists, bad for the planet, etc. And suddenly it became completely kosher. The biggest financial institutions in the U.S. are suddenly doing Bitcoin, and the BlackRock application for a spot market Bitcoin ETF was a turning point. Big money is coming into crypto, it's been announced, and it may take a few years to really finally arrive, but if you look at Fidelity, BlackRock, Vanguard, what about U.S. regulations? Aren't they still a barrier? In September 6th.
The next administration will decide the fate of crypto in the United States. If Biden stays in power, this administration could continue to be aggressive toward crypto. If it's someone else, I will see what happens.
And let's talk about offline storage devices. You know, Mark Cuban said in 2022 that crypto wallets were awful. Did he have a point? And, you know, businessy tested, you know, these cases are seen alive, and that's definitely what affects that I feel, not the resolution of volunteers, leadership to guidance, and then and critics and public traffic. Today, you can connect your wallet to Web3 and use your private keys to do many things, including buying, selling, swapping, and staking crypto, as well as engaging with decentralized applications and even declaring your taxes. As a CET on a 1 to 10 scale, and then, you know, where would you put cold wallets today in terms of user experience? You know, for the industry, it's a 3. For Ledger, maybe a 4. And, you know, we're striving to be a 10. The industry has a lot to do in terms of UX and UI, stuff, you know, your hardware software combo today is not just about hardware and software. It's an end-to-end experience. So when you're buying an Apple iPhone, for instance, you're not buying a piece of hardware, you're buying into the Apple experience. And we would ultimately like that to be the same thing with Ledger. Our approach is to do the absolute best user experience possible without compromising security or self-custody. There's too many users of DC records right now. Let's talk about in this video that all those ledger can be failed to CT Tennessee. And then I mentioned that you're not ledger divide links to safeguard those words, even engraving them in steel just in case their house burns down. Doesn't that sound sort of extreme? Well, it is a little backwards to have something like a metal plate in your home. It's not very 21st century, but we came up with a solution for this. When you use a ledger product, you end up with your ledger device and a PIN code. And you will also have those 24 words that become your master or password, basically. You need to keep those 24 words safe. And this is a major barrier to entry for a lot of people. But they don't trust themselves with those 24 words. They don't trust themselves not to lose them. So we came up with a service called Ledger Recover, optional paid subscription service provided by Co-Uncover that is expected to launch in October to deal with that. It allows you to shard your private key into 3 encrypted shards and then send them to 3 different custodians. They can't do anything with the encrypted shard. Only you can bring your 24 words together, again, if necessary. Don't we already have something like that with social recovery, where you entrust your cold wallet recovery to several friends or guardians? Social recovery doesn't really work. We've done something that resembles social recovery, but with businesses, i.e. Ledger, CoinCover, and Escrow Tech. And you will have to present your ID if you enjoy your care, if you want to initiate the shard recovery. You were criticized when you first announced the Ledger Recover service in May, and then the launch was postponed amid the backlash. So there were security concerns. People said these 3 shard holding companies could reconstruct your private key. There's still a lot of education to be done for people to understand really how security works. People said at that time that it might be a good product if it were more transparent and easier to adopt. So we didn't go live in May as planned in order to make the product open source, which adds something in terms of transparency, though not security. But couldn't 3 sub-custodial companies, at least in theory, collaborate and reconstruct their privacy key? It's not possible. They don't have the necessary tools necessary to decrypt and reconstruct and what's going on.
Well, moving on to Ledger's business model, do you sometimes worry that as big institutions like Fidelity Investments or banks like BNY Mellon enter the crypto space that users may simply park their crypto with them? If they get hacked, those giant custodial institutions will then make them whole again. Or at least that is sometimes the thinking.
We're a pure technology company. So when Fidelity decides to become a retail crypto custodian, they'll probably come to us and buy a part of our technology to build their own technology stack. Your business strides several continents. You're based in France, but you sell many of your devices in the United States. You have firsthand experience of those 2 business climates. The U.S. and Europe, are there key differences when it comes to crypto? Europe has a tendency to over-regulate or regulate too fast, generally speaking. Sometimes people say, well, you know, Europe has clarity because it has MiCA markets in crypto assets, the EU's new crypto legislation, while in the U.S. there is a lack of clarity and lots of lawsuits. But in the U.S., the way that the law is designed is slow and bumpy. It takes time to change laws in the U.S., but when change finally does not come, it's often for the better. If you look at the biggest tech champions in the world, they're mostly American or Chinese. 0 are European. Are you linking heavy regulation with a lack of innovation? It's hard to say if they're directly linked, But Europe has always had a heavy hand in terms of taxation and regulation. To me, there's no question they are linked. You know, at LVMH, the French luxury goods conglomerate, where Roger served as chief digital officer for 5 years. We worked with a lot of startups. Every European startup wanted to get to the U.S. or China to get scale before they came back to Europe. Europe is not a good market for your startup. That happened in the lawsuit. But Ledger remains positive about the future of cryptocurrencies and blockchain technology overall. Things are not necessarily what they seem to be. It was our French president, Francois Mitterrand, who said, give time for time. There's something going on now, and only the future will be able to make clear what is happening.